Welcome to the Times of Industry show, and I'm here in Carlsbad, California, a place very dear to my heart. Many people that are here have changed my life for good, and I've been invited to Sprott, USA, which is headquartered here. I'm actually a client myself of the brokerage firm, and I'm here to talk about, not about paper assets today, but actually physical gold and silver, one of my most favorite subjects to talk about. And I'm here with one of the living legends of the precious metals industry, the natural resources industry, Mr. Rick Rule, and thank you for inviting me over.
Thank you. Kind words will get you everywhere.
Well, I want to talk to you about the marriage between blockchain and physical gold and silver. Now, I'll tell you why I'm talking about this, because I've seen many companies in the past 2-3 years trying to do some sort of collaboration where they piggyback on the blockchain. And what I like is to basically scratch all the hype and understand exactly how blockchain could be married into the physical precious metals industry in a wise way. And I know you've done something very special. It's actually the reason I'm here, because I'm looking at it for my own personal benefits, and I'm glad that you invited me to talk to it one-on-one. And not only that, but we get to record this for a wide array of people that are very interested in physical precious metal ownership. So could you talk a little bit about Tradewinds and what that's all about, and then we'll kind of follow up with questions on this.
Well, as you suggest, Tradewinds is a venture that was set up to utilize blockchain and distributed ledger technology. Okay. It's important at the outset to say this is not a cryptocurrency. Okay. This is not, and I'm not criticizing cryptocurrencies, but this is not an artificial construct that gets its value from the algorithm or its liquidity. Okay. This is using the distributed ledger to evidence ownership in physical gold and silver and to facilitate transactions cheaply.
So it's blockchain and not crypto?
Correct.
Okay.
Correct. When the blockchain technology became apparent to us, it was fairly obvious to us that the technology could be utilized to lower transaction costs associated with the trade in any uniform asset. It isn't set up to do non-uniform transfers very well at all. Okay. But there's nothing in the world more uniform than gold and silver. It was pretty clear to us that the technology had the ability to disrupt traditional mechanisms in gold and silver trade and to disintermediate our own business. And if anybody was going to disrupt Sprott's business, it was for sure going to be Sprott. Now, given that we were an old economy company, we wanted to be in that business with people who were better at technology than we were. So we approached the electronic exchange operator, IEX, famous from Flash Boys, the people who have set up electronic exchanges to facilitate Vanguard, Fidelity, BlackRock, Blackstone, the biggest and most technologically advanced exchange operators in the world, to joint venture a physical gold and silver and soon platinum and palladium exchange online. As we developed a product, it became clear that we could hold on behalf of investors physical gold and silver at the Royal Canadian Mint, and allow the establishment of what I would call a deposit receipt, a distributed ledger entry that the Royal Canadian Mint would accept as absolute evidence of ownership, so that the gold or silver didn't have to change hands, but the delivery receipt changed hands, and any investor could, at any time, present the delivery receipt for good delivery of their physical gold and silver.
Is it tradable?
It's absolutely tradable.
Okay.
Absolutely tradable. And that's the beauty of the distributed ledger. The interaction, the facility of the exchange is so seamless. The storage, the clearing, all of the things that make securities and commodity trading inefficient go away with the distributed ledger. As the efficacy of the system began to demonstrate itself, major mining companies around the world began to become interested and ultimately have become shareholders. Wheaton Precious, Agnico Eagle, IAMGOLD, Goldcorp, some of the biggest and most successful gold mining companies in the world, came to understand that this would could facilitate gold ownership, could ultimately enable them to pay their dividends rather than in cash, in gold and silver, because of course their shareholders are interested in gold and silver, and also lower their cost of selling the gold that they produced into the value chain, importantly. We processed 3,000 ounces of gold for Goldcorp, and we were actually able to lower Goldcorp's transaction costs. In other words, one of the largest gold mining companies in the world, the efficiencies of the system are so great that we were able actually to disintermediate the value chain for Goldcorp, compress the value chain. So you can imagine what we could do for a 10-ounce holder.
Yeah, so let's talk about a real case scenario. So I am, I've always talked about this on the channel and in the newsletter. What I do is I take about 5% of my entire net worth. I always have that allocation in physical precious metal and allocate it about 50-50 between gold and silver at times. If silver is cheaper, then I allocate more to silver, etc. Right now with 83-to-1 ratio, obviously silver being a more speculative opportunity. And then on top of that, I have about 24 months of living expenses that I converted from fiat to precious metals, physical precious metals, in case anything happens, more catering to if there's a reset, a currency crisis, etc.
Right.
And I'm holding for the long term. This is not a speculation. This is not a trade. This is a whole term, long-term holding. And so for me, what's very important is storage fees and anything that has to do with keeping the gold and silver safe for a long time. So for people like me that do not trade the paper markets but are more interested in owning the physical metals, talk about a little bit the comparison between traditional and Tradewinds with regards to the fees involved and the safety involved, just so people can understand. And then lastly, for people who've done this for years and have bought from bullion, is there any difference, like in the time it will take and all that kind of stuff?
The time it'll take is instantaneous.
Okay.
It's because you're not moving physical gold and silver. The gold and silver are in place at the Royal Canadian Mint. So let's talk about safety first. The Royal Canadian Mint is, in survey after survey after survey, regarded as the most prestigious gold and silver storage facility in the world. And Sprott is the largest private client of the Royal Canadian Mint already. We have about $6 billion in physical gold and silver assets stored there as a consequence of our exchange-traded trusts. We laugh that with the gold stored at the Royal Canadian Mint, our security is provided by NATO. It doesn't get better than that. You don't have to worry about private company failure. This is a wholly owned subsidiary of the Government of Canada with no debt on the balance sheet. Extremely solvent, extremely safe. It's important to note, too, that many times when you have physical storage where somebody else is storing on your behalf, you have to know who they are and what they're about. In the case of Sprott and in the case of IEX, the principal shareholders of Tradewinds were public companies. Our balance sheets and our income statements are audited, they're freely available, and by the way, they're good, too. You don't have to worry too much about the solvency of the exchange mechanism or of the storage mechanism, because we are public and we are...
It's not a little family mom-and-pop shop.
We're extremely solvent. The consequence of storing gold in an efficient storage facility in very large quantity is that your storage fees are extremely compressed. You pay the same rate that we pay, which is de minimis to store the gold. Where gold ownership becomes problematic, perhaps not at the size that you're transacting, but at the size that many of your listeners and readers are transacting, is that the transaction costs themselves are pretty high. Traditionally, one of your readers or listeners would call a bullion dealer, let's say to buy 10 ounces of gold. Traditionally, the markup would be 3.5% from spot. You'd be quoted spot, so 13.25 or something this morning, but you'd be charged spot plus 3.5, plus the delivery charge, plus insuring the delivery charge.
Yeah.
If your circumstance changed in a week, not yours, but your reader's circumstance changed in a week, and he or she had to or wanted to sell, they'd have the same experience, which means in a week they'd be down 8%,
yeah.
depending on how it moved. In this circumstance, the transaction fees and the storage fees relatively are de minimis. Which means, and I'm not encouraging people to trade it, I am encouraging people to do with gold and silver precisely what you're doing. I'm, particularly with regards to gold, I myself own gold as a store of value. I regard it as financial insurance. I'm in the odd position, actually, of owning a reasonable amount of gold and hoping it doesn't go up too much in price, because the circumstance that would cause it to go up in price might change my lifestyle, yeah. which is pretty good.
The 90%, the other 90% of your net worth.
Yeah, would be problematic. And like you, occasionally I speculate. Occasionally I see something anomalous, much as you're seeing now. I see the silver market being oversold. I see a circumstance where gold likely trades higher, and the likely consequence of that is that silver likely outpaces gold. So I have a silver position too, but like you, perhaps part of that silver position is held for sale.
Okay.
And in those circumstances, the distributed ledger is so much more efficient than, if you will, the U.S. mailer, the U.S. mail, and the dealer network,
sure.
that there's no comparison.
So just in terms of practicality, how would someone open a Tradewinds account?
The easiest way to do it, or at least the way that we would prefer, would be that you would call Sprott. Okay. Call us here, 800-477-7853.
Okay.
We will take you through the process. It'll take 5 minutes.
Okay.
It's really very simple.
U.S. only, or is it international?
The phone number works for the U.S. and Canada.
No, the client itself. Can he be U.S. domiciled?
The client can be anywhere in the world,
okay.
to buy this particular product. Securities are a different question, but this particular product, the client can be anywhere in the world.
Okay. So it's easy for anyone to do that. Just give a call to Sprott.
Absolutely.
And, okay, so now let's transition a little bit. We talked about physical precious metals, and you know what? I love the vault situation. It's I don't want to be that guy that thinks about the gold in the back of his residence or any of that matter. It's just it's a hassle. So I love that it's through the blockchain, very easy, and all that kind of stuff. And obviously, a person that is in the stock market, anyways, stocks are the most paper assets as exists. So if you're not worried about where are your Microsoft shares, right. for example, then you should be fine with Tradewinds. I'm going to ask you about precious metals in particular. How much of an effect do you think that the rise of populism has on the price of gold? We've seen Semzel coming out and saying, look, I'm buying gold because of demand issues. Mm-hmm. We've seen Ray Dalio saying, I don't care what Warren Buffett thinks. It's a mistake not to own gold. And he's like the 6th largest holder on the GLD outstanding. And he's comparing this to the late 30s, all about the rise of populism. And then you have the basics. Every time the Fed has paused the tightening cycle and then cut for the first time, we've seen gold rising substantially, and now we're also seeing the dollar ending a very long bull market and the stock market ending a very long bull market. So we have like a conversion of things that are really working out in gold's favor. My opinion is that because of 2008, we've seen bullishness on gold for an extended amount of years, despite bad performance. Whereas in other cases, people would drop gold or gold equities sooner, and we would have this capitulation sooner. So there was hope for a lot of time, but it looks like 2018, sort of in August, we saw the sentiment so hated, and it looks like it's changing. So where are we in the gold market and gold equities?
Those are great questions, and I'm afraid it requires a fairly long-winded answer. Current ownership, and I'm going to talk about the U.S. first. Current ownership in the United States is that precious metals and precious metals-related investments have about between 1/3 and 1/2 of 1% of investable assets in the United States. You're right, nobody owns it. The peak in 1981 was 8%. The three-decade mean was between 1.5% and 2%.
Yeah.
So I'm not one of those, doom and gloom gold bugs who are saying that gold is going to supplant the U.S. dollar or anything like that.
Mean reversion and you're
I
good.
think that's what's going to happen. I think we're going to have mean reversion over the 3 to 5 year time frame, which means that precious metals and precious metals related investment demand will quadruple in a market that's still 25% of the investing universe. Now, interestingly, if you look outside the U.S. over the last 3 years, gold demand has been much stronger. In fact, gold is trading at all-time highs in over 70 currencies.
Right.
So we have seen interest in gold and gold-related assets from investors around the world for 3 years. It's worthy to note, as you mentioned, that in the last 2 years, both the U.S. dollar and gold have been strong simultaneously. This doesn't happen often.
Oh, that's right.
And looking beyond that, if, as an example, the populism that you describe becomes more pronounced, if governments become more pernicious, seems hard to imagine, but if they became more pernicious, if U.S. interest rates, rather than returning to market, continued to be manipulated lower and the U.S. dollar rolled over, my suspicion is that gold would do very well. This circumstance occurred at least once before in my life, in the year 2000. Gold had been strong at the same time that the U.S. dollar strengthened between 2000 and 2001. When the U.S. dollar began to roll over in 2002, gold began to slingshot. It went from $262 an ounce to a high of $1,900 an ounce. Now, I'm not suggesting that past is prologue, that this is going to occur again and that gold is going to go up sixfold. But the circumstance that we have in front of us is, I think, extremely bullish for gold.
Yeah, I know. It seems like people are saying, okay, it's already 1,300 or 1,325. That's a lot compared to what it was.
Right.
But the world is it's changed so much that what I like to think about is the coverage. How much of the U.S. dollar is covered by gold?
Right.
If it's the classical standard of 40%, if it's 100% like it was for a few brief weeks or whatever it was in the late in the early 80s, it's now what, like 5 or 6% of the currency supply.
Right.
So just on thinking about that, the case is amazing. But I want to ask you about a final question, and that is relating to the 83-to-1 current ratio between gold and silver, because I know that many people think about silver as the catalyst that brings a lot of speculative money into the sector. And if silver starts closing the gap to gold, then the equities tend to do very, very well.
Right.
Is the fact that silver acts as an industrial metal for most of the time, and obviously with any industrial commodity, the effect is that all miners want to compete for the lowest possible price. It's not like it has this premium that gold has. Now that we're entering a situation where the geopolitical environment is risky, we've seen these polls that come out that political uncertainty is at an all-time high. Could silver receive that premium that it received in 2010, 2011, where it was priced much above its production cost? And do you see the gap tightening, basically?
I do, for a couple of reasons. Traditionally, the investor interest in silver is, as you suggest, more speculative. And there are reasons for that. Not so much for you and I, who live in the United States, but for poorer people who want to defend their purchasing power from governments and fiat currency. The unit cost of silver is smaller.
Sure.
If you are a farmer in India and your household income is $3,500 a year and your savings is $500, you can't buy enough gold to maintain both safety and liquidity, but you can do so in silver. So when you begin to see precious metals move for the reasons that they're moving today, the unit cost of silver makes them a better investment and speculative vehicle for more people. Importantly, too, the silver market is opaque. When people look at silver supply, you can't look at primary silver production because 80% of new silver supply comes as a byproduct of gold, copper, lead, or zinc.
Okay.
So it isn't enough to know the economics merely of a silver mine. You have to know the economics across the whole spectrum of minerals. If, as an example, the fact that copper has been priced below the incentive price to produce copper for 5 years, if that means that global copper production falls, byproduct silver production falls along with it.
Gotcha.
At the same time
Same thing,
that it's difficult to forecast supply, it's difficult to forecast demand. Simply because silver has acted as a form of savings and money in South Asia, Pakistan, India, Bangladesh, and Sri Lanka for centuries. And nobody knows exactly how much silver is supplied there. The people there are leery to tell their government how much silver they have because they don't want the government to take from them. And beyond that, unlike gold, silver, as you have suggested, is used in so many industrial processes. Almost all the gold that's ever been mined still sits in a vault. It's odd, actually. We take it out of a hole in the ground called a mine, and we put it in the hole in the ground called a vault. Silver, however, gets used for a myriad of applications. And it's important to note that with regards to fabrication, the silver that's used goes to silver heaven.
Right.
Some of it gets recycled, but it goes away.
Yeah.
That combination of circumstances means that after periods of torpor, when the silver price moves, it usually really, really moves.
Now, silver equities and gold equities,
Right.
Your expertise for many decades. There are thousands of companies out there, and the success ratio is so minimal.
De minimis.
Yes. I want to ask you, when you and I talked for the first time, you said, Lior, if there's ever something I can do for you, for your listeners, I want to throw this out there. I'll give them my personal email, and they can contact me, and I'll help them rank their portfolio standings. And I want to ask you, does this offer still stand?
Absolutely. We've done it for thousands of speculators. We think it's a great public service. As you suggest, there's over 1,000 listed companies that purport to be in the mining business, and there are probably 150 that are worth considering.
Sure.
It is useful for people to have their securities ranked because it causes people to begin to wonder really what makes a company a good speculation.
Sure.
So any of your listeners that would like to email me personally, this isn't a Sprott offer, this is a personal offer.
Okay.
My email address is rrule, that's R-R-U-L-E at sprottglobal.com.
Yeah.
If you email me a list of your natural resource companies,
Just plain text.
Plain text. I'm too old and not smart enough to open all the attachments that your listeners would be using.
Plain text.
Plain text, name and symbol. I will rank them 1 to 10. I will comment where appropriate, and I'll send them back by email.
Sounds fantastic. I want to really thank you for taking the time and explaining Tradewinds to us. And obviously, same process, either an email or a phone call.
Correct.
And that's easy. And we can discuss my own account when we're done with this interview.
Thank you for your business.
Thanks for